Okay, so we're gonna get started. I'm gonna go through my presentation. I'll be off camera, but then I'll come back on after the presentation. Okay, so like I said, my name's Haley Campbell. My email address is on this screen. I'll also be sharing it again at the end. If you have any questions, it's hcampbell@wefloatafinancial.com. And then I have my cell phone number there as well, which is 954-871-7525. So today we will be going over the following topics, most of it related to credit, like I said. So what is credit, how credit works, types of credit, credit cards, good credit versus bad credit, how to build credit, repairing damaged credit, why credit's important and the benefits of using it, as well as investing. And then I will also talk about some of our products and how to join We Florida Financial. So welcome to your credit union. So just a little bit about We Florida Financial, if you're not familiar with us. We're a full service credit union that's been providing outstanding customer service since 1952. So this is actually our 71st year of being open, which is pretty awesome. We're not for profit, so every member that joins the credit union becomes a shareholder of We Florida Financial. And when you deposit money into your credit union account, you become both a customer and an owner. We offer low fees and high savings rates, as well as a range of loans, including auto, home, aviation loans, and more, which have low interest rates as well. We also offer CDs and IRA options too, which I'll be getting into towards the end of the presentation. So what is credit? Credit has multiple meanings in the financial world. It's generally the ability to borrow money or access goods or services with the understanding that you'll pay at a later date, typically with interest. Interest is the money you pay when you borrow funds, typically expressed as an annual percentage rate, which goes by APR. Lenders, merchants, and service providers, known as creditors, grant credit based on their confidence you can be trusted to pay back what you borrowed, along with any charges that may apply. Credit's a part of everyday life for many people. People use credit cards for several things, such as buying a car or home, utilities, student loans, etc. Credit can also refer to an individual's creditworthiness or credit history. So how credit works. Like I said, some of this might be a refresher for you, but I just wanted to, go over all of it. So a credit report is a detailed summary of an individual's credit history. Your credit history is summarized into credit reports that are compiled by 3 independent credit bureaus, which are Experian, TransUnion, and Equifax. Banks, credit unions, credit card issuers, and other creditors voluntarily report your borrowing and repayment information to these credit bureaus. Information in your credit report includes, the number of credit card accounts you have, their borrowing limits, and current outstanding balances, as well as the amounts of any loans you've taken out and how much of them you've paid back so far. It also includes whether your monthly payments for your accounts were made on time, late, or missed altogether. And it also shows more severe financial setbacks, such as mortgage foreclosures, car repossessions, and bankruptcies as well. Types of credit. So there's many types of credit. I just wanted to talk about 3 of some of the main ones. So that is installment credit, revolving credit, and open credit. So installment credit is when you borrow a fixed sum of money and agree to make monthly payments until the loan is paid off. So examples of this would be like student loans or auto loans. Then there's revolving credit. This is a line of credit you can keep using after paying it off. So you can make purchases with it as long as the balance stays under the credit limit, which can change over time. Some examples of revolving credit are credit cards and personal lines of credit. And then the last one I wanted to mention is open credit. So this is a pre-approved loan between a financial institution and borrower that may be used repeatedly up to a certain limit and can subsequently be paid back prior to payments being due. So some examples of this would be home equity lines of credit or HELOC, as well as debit cards. And then speaking of cards, I want to talk about credit cards. There's also many types of credit cards, but I just wanted to talk about some of the most popular ones. My favorite are rewards credit cards. So they give you a little something back with each purchase, which is what I like. Some examples are cashback cards, which earn back a percentage of your spending, and travel rewards credit cards, which typically give you points or miles for the purchases you make. So you're getting something a little back with using the card. There's also low interest and balance transfer cards that are typically designed for people carrying debt. So if you're someone that's carrying debt, it would be a good idea to get this because low interest or 0% cards save you money by reducing the amount of interest charged on your purchases. And then balance transfer cards let you move high interest debt onto a card with a lower interest rate. So if you have, if you have some sort of debt where the percentage is like, the interest is like 27% or something very high, you can transfer it onto a balance transfer card where it's a lower interest rate. So it's easier for you to pay it off, basically. There's also credit building cards, which are designed to help build and or improve one's credit. These are typically designed for people with poor credit scores or who are new to credit cards entirely. Some examples of this are student credit cards and secured credit cards. So if you're someone that needs to build yours or improve it, this is definitely a good option. So good credit versus bad credit. A credit score is a 3-digit number, usually on a scale of 300 to 850, that estimates how likely you are to repay borrowed money and pay bills. Credit scores are calculated from information about your credit accounts. That data is gathered by credit bureaus and compiled into your credit reports. As mentioned before, the 3 largest bureaus are Equifax, Experian, and TransUnion. So on the screen, I have some credit scores listed. So a score of 720 or higher is generally considered excellent credit. A score between 690 and 719 is typically considered good credit. 630 to 689 is typically fair credit, and then scores of 629 or below are usually considered poor credit. If you don't check your credit score on a monthly basis, I definitely recommend it. You can check your credit score through some banking apps as well as for free through creditkarma.com. So Credit Karma, you just type in, your email, make an account, type in your social security, and you can literally see your credit score for free. I think it's very important to check your credit score because for me, for example, I think it was about a month ago, I had some marks, some hard inquiries that were bringing down my credit score because it said that I was paying my student loans late, which I never had paid them late. So I basically had to fill out a form online to dispute it, and they ended up fixing it and it raised my credit score. So it's good to just always check and make sure that everything on there that it says is accurate because you never know. So how to build credit. So to build credit with a credit card, you can open your first credit card account if you don't already have one. You can get a secured credit card, which is a type of credit card that's backed by a cash deposit from the cardholder. You can also become an authorized user, which is when another person who is a cardholder grants you access to use their account. And you can also request a credit limit increase on your current credit cards if you have one. This isn't as suggested, but to build credit without a credit card, you can pay all your existing loans diligently. So if you have any loans you've taken out, just being sure to pay them off. That can help you build credit. And then there's also installment loans. This is basically a lump sum of money that you borrow and repay in payments or installments over a period of time, which is usually months or years. Installment loans can strengthen your credit if you make consistent on-time payments. And I'm just checking. I don't see that we have any questions so far, so I'm going to keep going. So repairing damaged credit. Check your credit score and report on a regular basis. As I said before, it's very important because there might be things on there that are inaccurate that you need to dispute, or things you didn't even realize, like old bills that may be, been sent to collections or something like that you can take care of. So fix or dispute any errors or negative marks on your credit report. Always pay your bills on time. Try to keep your credit utilization rate below 30%. If your credit limit is $1,000, you don't want to be at $1,000. You want to keep that rate under 30%. It's also important to pay down any debts and outstanding balances. Paying off your debt and getting rid of it is one of the most important things. It's also a good idea. Some people don't know this, but it's a good idea to keep old credit cards open. In general, it's best to keep unused credit cards open so that you benefit from a longer average credit history and a larger amount of available credit. So if you have a card that's old, you don't really use it anymore, it's best to just keep it open because you'll get marked if you close it. And you can always use it every once in a while, like, every few months or so, just so it's active. And that's about it for repairing damaged credit. There's so many reasons why credit's important, and some of them are reasons people don't even think about. So I wanted to go over them. So some examples of where credit is important are when you're applying for a credit card, mortgages and auto loans, insurance and utilities, renting apartments, condos, or houses, housing applications, and even job applications, which some people don't even realize. And then the benefits of using a credit card is it can help you save on interest and fees. It helps you manage your cash flow. You can avoid utility deposits or be granted lower security deposits. So if you're going to rent somewhere, for example, if you have a good credit score, your security deposit is typically going to be lower than if you have a poor credit score. You can also get better credit card rewards. It helps you avoid and limit financial fraud, and it can also help you with purchase and travel protections as well. So investing. I just wanted to go over investing. It's not really related to credit, but I just wanted to share some information on it. So investing is the process of buying assets that increase in value over time and provide returns in the form of income payments or capital gains. So whether you're just starting to invest or want to make some changes to your current portfolio, it's important to incorporate an investing strategy into your yearly financial plan. It's really never too late or too early to invest. So you can do it at any time. Don't feel discouraged. First, you would just need to determine how much you can invest and which accounts those contributions will go to. So I think it's best if you're employed, start contributing to an employer-sponsored retirement plan if one is offered, such as a 401k. If you're already contributing, try to increase the percentage if you can. Some companies match the percentage, which is awesome. So it's good to find things like that out. If you have an HSA, it might be a good idea to consider maxing out your contribution. So HSAs allow you to pay for qualified medical expenses pre and post retirement. The money you invest in an HSA is tax deferred and it can be used tax free. Another way to invest if you have children could be opening or contributing to a 529 plan. Once after-tax dollars are put into this education fund, any gains are tax deferred and funds can be used tax-free when applied to qualified education costs. Also, if you just have extra income you want to invest, consider opening a robo-advisor account. You can find information about that online regarding robo-advisor options. I wanted to talk about some of the ways we can help you invest, we Florida Financial. So we offer investment options such as CDs, IRAs, and high yield accounts, high yield investment accounts. So we have investment account options for new investors as well as seasoned veterans looking to diversify their portfolios. So if you become a member, you can open an investment account in 4 different ways. These ways would be a money market account, high yield investment account, high yield accumulation account, or a certificate of deposit account, also known as a CD. I have been loving CDs because we have really good rates that are competitive up to, I believe, 4.5%. So it's a great way to grow your money. And so a little bit about CDs. A certificate of deposit account is a type of savings account with a secure guaranteed rate for a disclosed term. One of the most attractive aspects of a CD account is that it's relatively safe investment for your money. A CD is an effective way to allow your money to grow at a great interest rate. So we have many different options for that. It's all listed on our website if you want to check out our rates and different term options and things like that. When planning and saving for your retirement, there's also no better time than the present. So no matter your age or income, when it comes to setting up a retirement account, the sooner the better. Florida Financial provides our members with options to start a traditional or a Roth IRA with some of the best rates of any Florida credit union. Both grant members the opportunity for long-term tax advantage savings. So Roth IRAs have been super popular in this day and age, and our rates are very competitive. Each investment account type has its distinct features and benefits to help your money grow. And some of the best rates in Florida, we top the list of credit union investment options. So definitely consider us. Or if you have a current, financial institution that you're already using, you can also check out their rates as well. So we care about your financial literacy. So we Florida Financial is partnered with Green Path Financial Wellness. Green Path provides free individualized counseling, guidance, information, and tools to help individuals meet their goals and improve their overall financial health. So to access these services for free, you can go to our website, which is on the screen. It's wefloridafinancial.com. And on our homepage, you just scroll down to Green Path and click the link. The top photo is what it looks like on our website. And then there's just so many great resources on there. I recently printed out one of their budgeting sheets and set up a budget for myself, which has been really helpful. So there's just a lot of tips, tools, printouts, things like that you can get involved with for free. If interested in joining Florida Financial and becoming a member, there's no fee to join. It just costs $5 in a savings account to open the account and keep the account. So as long as your $5 stays on deposit, you're eligible to benefit from any of our credit union services, such as, applying for loans, mortgages, anything like that. The only qualification is you have to live or work in one of our 46 Florida counties, including Broward, Miami-Dade, and West Palm Beach. People sometimes think that credit unions are only for specific people, like people who work in a certain area or, things work for a certain company or something like that. But we're open to anyone and everyone. You just have to be a Florida resident. You can apply online to become a member at wefloridafinancial.com. You can also go into any of our branch locations. And if you do become a member and you happen to not live right near one of our branch locations, we do free Publix Presto transactions as well. So we're very accessible. We also have a mobile app that you can pretty much do anything on. We have Zelle, all of that, and you can do a lot through our website too. So we connect. I just wanted to share some of our social media platforms. I actually run these. So we're on Facebook, Twitter, LinkedIn, YouTube, Instagram, and TikTok. All of our accounts are We Florida Financial, except Twitter's We FL Financial. Our YouTube channel has some financial literacy recordings, webinars, things like that. So does our website. I've also been doing financial literacy tips, like quick clips on TikTok and Instagram. So it's good to just check out and learn financial literacy, learn about our promotions, learn about events we have coming up, things like that, where we really care about the community. We actually just sponsored a cat's adoption. So we paid all the adoption fees and bought the cat food. So we're just looking for someone to adopt the cat for free. Like, we like doing things like that, giving back to the community, especially the underserved, as well as, animals and things like that. So we're very community based. If you have any questions or feedback, as stated at the beginning of the presentation, my email is hcampbell@wefloridafinancial.com. And my cell number is 954-871-7525. And I'm actually running a special right now. So if you do want to become a member, you can sign up on our website or even in person, and when it asks how did you hear about us, you just type in the code on the screen, which is community 25, and it'll give you a free $25 on me after having your account open for 90 days. So that's just a little incentive if you are interested in becoming a member. So that pretty much wraps up the